As a self-employed business owner, the only true way to retire is to simply sell the business. This is important to understand because whether you realize it every single day or not, as a business owner, the business is a huge part of your lifestyle, your income, and simply your retirement plan as well. It's also important to know the value of your business as a business owner. So in the analysis below, we've used the times revenue method, and it takes the net annual revenue, divides it in half, and that gives you the low evaluation of the company. However, it also takes the net annual revenue, it doubles it, and it gives you the high evaluation of the company. This range is a pretty solid range of what you can expect to sell the business for based on last year's net annual revenue. In our scenario, RBI is predicted to sell between $85,750 and $343,000. So again, a pretty wide range there. However, it is a range that we can count on and utilize during the retirement planning process. Based on that range, we will go ahead and assume that RBI sells for $85,750. This is because we want to always use the lower evaluation, and then any additional proceeds that are obtained from selling the business will simply be additional assets, and we can include those in the retirement plan at that time. But modeling in the higher evaluation would probably add too much of a cushion, and it's not a cushion we can count on. So that's why we'll use the $85,750. Mike, Social Security will begin paying out for you at 67, and your MLB pension will begin paying out when you reach 62. So if we did decide to retire at 60, which I know was one of y'all's goals, we would have to plan on bridging the gap, awaiting the pension payments and Social Security payments with $97,550 of your retirement assets. And that number will go down as your pension pays out, but that just puts it in perspective that you're pulling quite a bit of money from your retirement assets, retiring at 60 instead of 67. That $97,550 is the assets you'll pull from your retirement plan, and your goal is to only pull $100,000 a year. So most of your assets are coming, like I said, straight from that retirement plan. Let's compare if we retired at 60 versus 67. So if you retire at 60, you would need to accumulate more assets as compared to, waiting to retire at 67. Retiring at 60, we have calculated that you'll need to obtain between $2,142,340 and $2,316,910. So pretty big numbers there that you'll need to accumulate before 60. If you waited to retire, then obviously you would need to acquire less funds, again, if you waited till 67. So you would need to acquire between $887,312 and $969,813. This is a substantial difference when thinking about the amount of money that you'll have to accumulate between now and retirement. I know retiring at 60 is a personal goal for you both, and there is a gap that we'll need to account for if you do decide to retire early. But you have to decide what's important to both you and your family, as well as your retirement plan, considering the additional assets that would be saved. That could mean sacrificing vacations or extra stuff that you guys do. The discretionaries is what would be sacrificed. Those essential expenses would stay in place, but really any discretionary at this point would have to be given up. That leads us into our recommendations. So going back to the business, one recommendation is to attempt to begin finding a buyer for RBI a few years before retirement. So in this case, we put a few years before turning 60, knowing that was your goal. But if you did decide to wait until 67 to retire, then we would say to attempt to find a buyer a few years before turning 67. Finding a buyer is important in our analysis and recommendation, because we are assuming that you receive $85,750 from the business as when you sell it, to pad that your retirement assets. Now, if you decided to sell or not sell, at least trying to find a buyer will help you appraise your business and know what it's worth whenever the time comes. But again, I need to stress that it is important that we at least obtain $85,750 for the business. The second recommendation is waiting until 67 to retire. So it is more beneficial to wait until 67 rather than retiring at 60, simply because a few reasons. But one, it provides 7 additional years of working income for both of you. It also allows the business to continue to grow in revenue, therefore increasing your sales price when the time comes. I know that we did not include Michael's college tuition, when planning for retirement, but it is really important to note that you will want to pay for his tuition, and therefore for those 5 years that you're paying for that, it will not directly impact your retirement savings plan if that's the case, if you waited until 67. Lastly, retiring at 60 would require an additional $70,202 to be saved annually. That goes back to the $2 million figure and the $800,000 figure as to what would need to be accumulated whether you retired at 60 or 67. So retiring at 60 would require additional assets to be saved annually. Versus retiring at 67, you would only need to save an additional $12,761. This is extremely important. I cannot stress this enough, that your discretionary assets would be where we had to pull this money from, and so your discretionary budget. And so I think it's extremely important to decide what is it worth to retire at 60 versus 67 in your eyes. And whatever that answer is the route that we're going to go, and we will make do, and we will make sure that you guys live happily in retirement.